Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Monday, April 18th. Earnings season is rolling along, and the big names out with quarterly numbers today are mostly beating expectations. But investors on Wall Street are largely ignoring those results and focusing instead on renewed sovereign debt concerns from Europe and a cut in the U.S. outlook. Standard & Poor's downgraded its outlook on U.S. debt to negative, but kept its AAA rating on the world's largest economy. S&P said that U.S. policymakers have no plan on how to address long-term fiscal pressures, but the Treasury responded that the agency is underestimating its ability to reduce the debt and deficits. Following the cut, gold is rising to a new all-time high, just shy of $1,500 an ounce. Meanwhile, in Finland, a party opposed to European bailouts made a strong showing in parliamentary elections. The party may become part of Finland's coalition government, which could slow or even derail the planned rescue of Portugal. And a Greek newspaper reported the country asked the EU and IMF to restructure its debt. That's sending the cost of insuring government debt sharply higher, and stocks across Europe are sliding.
One European stock that's bucking the downward trend today is Synthes. The Swiss medical device maker confirmed that it's in talks with Johnson & Johnson about a possible buyout. Last week, the Wall Street Journal reported that a deal between the two companies could be worth about $20 billion. Synthes makes medical devices to help fix and regenerate skeletal tissue and specializes in spinal products. A deal would allow J&J to double its market share to 30%, putting it behind only Medtronic in that segment. Johnson & Johnson is modestly lower on the news, but Synthes is jumping 7.5% in Swiss trading. British medical device maker Smith & Nephew is dropping about 4% in London. There had been speculation that J&J would make a bid for that company.
On to the day's big earnings news. Citigroup reported a 32% decline in its first quarter net income, but the results were a bit higher than analysts expected. Shares of Citigroup are dropping nearly 2% on the news. The biggest U.S. banks have been able to limit their loan losses and boost their profits since they were bailed out by the government more than 2 years ago. They've been helped by record low interest rates and trillions of dollars in stimulus programs. But last week was a rough one for some of the country's smaller financial institutions. According to Weiss Ratings, 6 banks shut their doors: Heritage Banking Group of Mississippi, Rosemont National Bank in Minnesota, Superior Bank and Nexity Bank, both in Birmingham, Alabama, and in Georgia, New Horizons Bank and Bartow County Bank. That brings the total number of failed banks and thrifts this year to 34.
A couple other big names are out with earnings today. Eli Lilly reported a 15% decline in its first quarter net income, mainly because of a charge related to its partnership with a German drug maker. However, revenue rose 6%, and both Lilly's profit and sales numbers topped estimates. The company also revised its earnings outlook for the full year downward, weighing on shares in early trading. Right now, they're losing about 1%. Shares of Halliburton are also lower this morning, dragged down along with the overall market despite a largely positive quarterly report. Profit at the oilfield services giant more than doubled, and revenue jumped 40% due to increased drilling activity in the U.S. The results beat Wall Street forecasts. After today's closing bell, Texas Instruments will release its first quarter numbers. It will be the chip maker's first earnings report since announcing its $6.5 billion purchase of National Semiconductor earlier this month. That's the latest from Weiss Research. Have a great trading day.